Good morning. This is Josh Hayes with Hedge Plus, and here is today's market monitor. Well, we had a lot happen over the weekend, but not much change to the markets. At one point last night, I actually put out a post on X saying that if we did open the week overnight trade with a surge in crude oil and a surge in prices with wheat market, it probably wouldn't be a bad idea to take advantage of the uptick with some wheat sales. Uh, Basically, that the thinking behind that was that any rallying would be short-lived. There had been talk all day yesterday that in response to the United States bombing the nuclear sites in Iran, that Iran would close the Strait of Hormuz. Their legislative body actually went ahead and did vote for that to happen. It's somewhat of a ceremonial uh, step in the process, as they have a higher authority above that actually makes the final decision on closing the Strait of Hormuz. A lot of people mistook the vote of the legislature as being a final step. And beyond the fact that it's not a final step, there's also been a history with Iran threatening to close the Strait of Hormuz and then uh, choosing not to. It's also not quite as potent of a threat anymore, given that most of the oil that passes through that strait is headed towards Iran's allies. All that said, my expectation was that if the strait even closed, its impact would be uh, lessened and certainly less than people were expecting. And also had my doubts that it would even close at all. Regardless, the market seems to have taken all of that into account, and we really didn't see much rally at all, not even with crude prices. Crude prices start up about 3-4% at the open, but as of right now are just a little bit over even. So if crude oil is not even going to react to what's taken place in Iran to date, not really likely to see much spillover into the grain markets, and including and not even the wheat market. So there is a raised possibility of escalation, but the market's obviously still taking a wait and see approach. Iran has vowed to respond and to hit U.S. targets. We'll see what takes place there. Um, if Iran were to hit any U.S. target, then you might start to see some impact, because what would take place then is you would definitely see some hoarding going on in the Middle East, and the fear that their supply chain would be disrupted. But short of that, the market is not at this point ready to price in too much risk from what's taking place in the Middle East. We came off another strong week of export sales. Again, another factor that's somewhat being ignored by the markets in favor of weather. And right now, weather is still forecasts are still considered positive, if not optimal. Even this heat we've had here in the last 5-6 days, it's coming at a time where heat has been welcome. The key point of the forecast is for mid-July during pollination. And as of right now, forecast is not calling for a heat dome over the Midwest. I'm calling for um, seasonal temperatures and seasonal precipitation. We are seeing a little bit of a concern area popping up in the Northwest Corn Belt areas such as western Iowa, eastern South Dakota, and eastern Nebraska are getting too dry, and this recent heat is only exacerbating that. But as of right now, forecast models have those areas set to receive rain here in the next week or so. So that is not currently a concern, and the good weather here and the continued good yields they're seeing coming out of South America are overriding just about every other market factor. So the fact that we had what took place in Iran, and it's not even really impacting the crude oil market. It's not really impacting the financial markets. Is a very bearish sign for the grain markets if this conflict can't even get those markets to budge. Taking a look at the weather, very hot and dry in the northwest corn belt, as I mentioned. The heat and the dry air is starting to move eastward, and that's actually considered a positive. It's been way too wet in the east and southeast, so those areas getting some relief via heat and dry weather is definitely a positive right now. Help some of those places out east get caught up and get finished planting. Argentina is getting a little too dry for wheat establishment, and in South America, it's still too wet for their wheat and corn. Safrinha crop, maybe some late season loss in yield potential there if it continues to stay wet as it is forecast to. And the European Union, Western Europe, west is still too dry and it's creating water and crop stress. That is a area that's seen some significant crop damage, but not enough, I guess, supply or area impacted to dramatically push the markets. Taking a look at overnight prices, you can see we're down across the board. A little bit surprising here, especially and including wheat. Thought for sure at least we'd see some bounce with wheat. If a wheat market can't even bounce off of what's going on in the Middle East, hard to expect anything uh, to see anything with corn and beans. Still going to be heavily dependent on weather, and I'd say as of right now, the second most important factor would be trade deals, getting those announced here soon. Uh, it's going to be a while before weather is anything but the top issue. And if there's no further major escalation in the Middle East, that'll continue to be a non factor. That is all for today. I hope everyone has had a great weekend. I look forward to a great week ahead, and we'll talk to you again tomorrow.